And on Wall Street, the Dow slipped a bit on Friday. That ended its longest winning streak in 17 years. What happens this week could depend on the Federal Reserve, which begins meeting tomorrow. CBS News contributor and analyst Melody Hobson is in San Francisco. Melody, good morning.
Good morning.
All right, so help us explain what happened on Friday. Do you see that there's a bubble in the stock market?
I know people are saying that because the stock market is up 8,000 points from its March 9th low and up 9% already this year on the S&P 500 that we're entering bubble territory. I don't agree. It's a bull market, which is a very good thing. We had $700 billion leave stocks between 2008 and 2012. In the first few months of this year, $60 billion has gone in. So that's had people say maybe it's a bubble. We're far from it.
So, Melody, you think this is actually based on some real strong economic fundamentals?
That's exactly right. We have had a situation where, first of all, the stock market is not overvalued. Valuations are actually pretty good. We've had really good corporate earnings for many years now. And on top of that, we've had very low interest rates. So this is the perfect environment for a strong stock market.
So what do you think happens this week with the Federal Reserve meeting? What does that do to the stock market?
I actually think very little. I know Fed watchers out there will be listening for every word, every clue. But Federal Reserve Chairman Ben Bernanke has been very clear about his intent. He intends to continue to buy back U.S. debt, which is a policy called quantitative easing, as long as the unemployment rate is above 6.5%. We're at 7.7 right now. So that should continue to keep interest rates very, very low so that corporations and individuals will go out there and borrow money and keep this economy going.
Quickly, Melody, what do you think it's going to take to get people back in the market? A lot of ordinary investors fled after the recession and haven't come back yet.
That's right. They will start to see this market continue to do well. Unfortunately, that in some ways is a bad thing because they'll be late to the party. Of course, I'm always a proponent of being in the market, having a strategy and sticking to it, not trying to time when to go in and when to come out. And I hope more and more people will heed that advice.
All right, everyone's watching their 401k move up after a slow period. Thank you, Melody.
Melody Hobson, thanks.